All right, I guess we're rolling. Hey guys, this is Hala Pablo. Let's continue our series on traumatized tokens. Let's do a quick video tonight. I want to talk about COTI, 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 otherwise known as the currency of the internet. The currency of the internet. Yeah, this is traded on Coinbase for now. This is one of the traumatized tokens, guys. This is one of the tokens that the SEC has their crosshairs on. And it's no surprise. I mean, currency of the internet. So, it's it's got a finance application. And that's a big no-no. And so they're going to do everything to shut stuff like this down, which seems to be the path they're taking, is to designate everything that they don't like as a quote-unquote security. So this is what they're doing with COTI, or COTI, or how the hell you say it. I don't know, but it's a short form for currency of the internet. It's a layer one blockchain platform that offers decentralized payment solutions. Alarm goes off, enabling businesses, organizations, and governments to issue their own coins. Basically, you fucking can create your own damn stable coin with this thing. And so, yeah, they're going to put a hit out on it for sure. Uncle Sam doesn't like stable coins, doesn't like anything but USD, and it doesn't like stuff pegged to USD either. And this thing, this COTI, says that businesses can create their own stable coins, so right away they're going to put a hit out on it, and that's what they did. It's one of the many tokens and coins that have been designated as illegal securities. So no big surprise. So you could read more about it here. Tells how it works, history of it and such. I think they partnered with Cardano, so Cardano's mixed in with this too, and Cardano's another one that is on the SEC's shit list. So anyway, let's go ahead and look at the technical analysis of this. This is something, I've swung trade COTI in the past, and I've made some money off this with swing trades, but not long-term investment. I don't really know enough about it to really have a lot of confidence in investing long-term and DCAing in it. So this isn't one that I'm presently DCAing in, but I think it's worth some investigating, because if the SEC doesn't like it, then there's probably a good reason for it. And this next bull cycle that comes, this could be one of those that just flies, like Filecoin, I believe, and Algorand. So anyway, I don't want this video to go over 10 minutes, so let's get right into the nitty gritty here. So it's in a regression trend right now. I drew out a kind of like a rough Wyckoff range on it, with the selling climax, the automatic rally, and secondary test. And we see that we have a series of lower highs and lower lows. Tempted to call it like a parallel, just like a descending channel. But these things have a habit of morphing into fall. It's just like basically a variation of a falling wedge, which we all know is bullish. When it would break north, nobody really knows. Nobody has a crystal ball, but we see that it's tried several times. So when it's sunk here underneath the trading range support, we had looked like a deep spring here, and it shot back up. I just designated this as a UTAD because this area here would be the last points of supply. Now, like I teach, everywhere we see volume spikes in demand, you see these larger than average volume spikes here, 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 here. We see these demand tests, another one here, and then this one here. These are all demand tests. These are very, very important to pay attention to. When you see relatively low volume in both supply and demand, and then suddenly you get these spikes, and we saw a series of demand spikes here. The same goes for supply, but we're talking about demand right now. This actually falls under a Wyckoff rule called effort versus result. In short, it just says that the effort should equal the result, or the result should equal the effort. So if you have a lot of effort, in this case a lot of buy power, a lot of buy orders being done, then it should propel the price action considerably in proportion to the volume. And so we see these larger than normal demand spikes, and then we look up here in the price action and we see what it amounted to, and it was basically failure to rallies. This one amounted to a UTAD, this first big one here that came up after the spring. We saw that it amounted to a UTAD, this huge freaking wick here, and this denotes bear power. That the bears are pushing it down, the bulls are trying to break forth and go to the moon. The bears are saying nope, and they're pushing back down, and then it propels the price action back into the descending wedge. It tries again here, and we see another. This time it doesn't even break the regression trend resistance, and so this is a failure to rally. And then all these subsequent demand spikes amounted to failure to rally. Like we see all this buy power. It should be, this price should be like propelled up here. It should be like mitigating this, UTAD if it were going to mark up. But instead, it hardly even breaks resistance again. And this time it goes back down. And then we have your LPSY here, the last point of supply. And then currently where we are, okay, we're at 6 minutes. It formed a 2-bounce floor. And we're right now on the heels of like the Bitcoin bleed out. Bitcoin just dumped. And so it's pulling some of these alts down with it. Now, this particular alt, COTI, hasn't gone down that much in proportion to some of the other coins. So that leads me to believe that smart money has some sort of accumulation or some sort of like absorption campaign going on at this level. We've had this mitigation from the spring here, mitigated back on June, back on June 9th, and then we've had another mitigation here from the June 9th to today. So it remains to be seen if we're going to mark up from here, if we get a good bounce off this support zone. If we do, these Fibonacci extensions are where we can expect the price to go. And so we have the 1.272, and the 1.618 being the golden extension here, and that would mitigate this micro liquidity void right here. So the price usually comes back up and it mitigates. Like water seeks its own, the water comes back up to the surface level. So the same thing with price action. So if the price does shoot back up from here, it does like a successful test, and it comes up, we can expect it to hit this Fibonacci zone here, which would be the 0.0739, and that would be an area where I would sell this if I were to buy it after the successful retest and ride it up here. And that would give us about let's just say if it marked up from the zone here, what we're at 8 minutes, that would be a substantial markup. Wow, I didn't expect it to go that high, 125%. If it went to the 1.272, we're looking at more of like 100%, 104. And then if we go back up to the 1 fib, we'd have a cool 86.05%. Those are damn good numbers. That's if it marks up. I don't know if it's going, and quite frankly, I'm still kind of pessimistic with all that. What looks more inviting to me and more probable to me is that we're going to go down. We may hug this support zone and go down even further. And if we do, because I think if Bitcoin breaks out of its macro wedge, which I think it did, and it may go back up and retest the bottom of this wedge, and then if it's rejected, then it's going to fall. It's going to really fall, and then we can expect COTI to go with it. And these are but for short term, these are the retracement levels that I'm looking at. And if this is a coin that you're interested in DCAing, you can start DCAing at the 1.414, which is 3 cents. And then there's another one at the 1.618, the golden. This would be, I guess, the golden retracement level. It would be 0.0307 or something around in that area. So that's all I got for COTI. Yeah, this is a distressed, traumatized token, and it could it may be in for some more hurting too, just like so many of these finance coins. But yeah, this is a finance token. This is one that enables people to create their own stable coins. So this is one that's like particularly hated and stigmatized, I'm sure, by the SEC. So anyway, that's all I got. If you enjoyed this, if you like this kind of content, thumbs up, subscription. I'd appreciate that. Put these videos more in the algorithm on YouTube so they'll be more prevalent and people can, learn from these traders and such. And you can always check out my TradingView. I have my TradingView account. It's going to be listed and pinned there. It's the Hala Pablo. Check it out. It's 80 to 85% win rates, and you can go off. You could see all my trading history there. So, all right, guys, that's enough for me. It's late. I got to go. Got to take a shower. Okay. Safe and happy trading, and have a good night, and we'll talk to you soon. Bye-bye.